Hey guys, so I'm going to be going over Nadex in the money and out the money trades. You'll often see this as ITM or OTM. Now, an in the money trade has a lot of benefits, but it also has some downfalls. Now, I'm looking at the 5-minute binary options, which are a lot harder to trade on than hours, and you could lose a lot more money a lot faster. If you don't have a really good sized account, I wouldn't even try to do 5-minute binaries. It's very risky. 5-minute binaries are very, very risky. You lose a lot of money really, really fast. But anyways, so right here, you can see got about 3 minutes left on this option. And by the time I'm doing this, I can only make 9.5, well 10. Now, if I make this order, yes, I may make $9. Oh, actually, it opened up at 22. No, it opened up at 9. But even right there, I'm already minus 1150 because of the spread that I'd have to do for purchasing it back. Now watch this. Now if it comes all the way up here, even though it was all the way in the money right there, I would lose $90 from that trade. Now while the probability is a lot higher that it's not going to, just because of the place that it is already at, if it does, then I'm going to lose a lot of money. But one of the benefits of being able to trade in the money is it is already in the area that you want. So right here, if I took this trade, actually this option is about to end in a couple seconds, so we'll actually wait for the next trade. And one of the big things is when you're trading in the money trades, you got to make sure that you are using the right risk. See, look how close that was, and it's not quite at the end, and it actually might go all the way up there. See, look at that. Now, even though it seemed like it could have been a good trade, that would have just a loss of $90, and that's a hard thing to come back from. That's why I wouldn't take any trade that's in the money that is less than $25 that you can make. It's just it's too hard to get it back. Did the wrong one. But the benefits of doing a out of the money trade is, and we'll even see if this trade goes through, because this actually looks like it's probably going to the upside. We'll do. What's a good thing about the out of money trade is you're risking less, but you can make more. I've seen live trades where if I would have bet $40, and I was actually really mad I didn't take this trade at the time, because I don't have a lot of money to actually invest. I just know a decent amount about investing, and I saw it because it was bouncing off of a resistance line from a trend, was a trend line, and then I knew it was going to go down, and someone actually put a trade out for $4. It was a $4 buy-in trade. It was an out the money trade, and he put a list for, I think it was 20 of them, if I remember right. So if I would have just bet even just the $10, that would have been $960 off of just it. This was a 5-minute chart too. So if you watch the charts long enough, you'll see like incredible out of the money trades on occasion. But it really, like I said, it really all depends. And I'm not really a huge fan of using the charting of Nadex. For 5 minute charts, it's okay. But for anything over 5 minute charts, I like to use TradingView. But we can see right here, 91.5. So that's how much we'd make. And that's not a huge disbelief for it to go down there. A good thing to take note of is the ATR of the area. And the ATR stands for the average true range. See, I wouldn't make this one. I wouldn't make that bet personally, but this, because actually it might go to the downside. This bet wouldn't be horrible to make right here, and this would be 81. And right now I'm already above broken even for this trade. So I could just do another trade just for shits and giggles, because unless it goes above this line, then I'm still not like in the money. I might lose a couple dollars if it doesn't go down to here. But if it jumps down to here, which isn't a huge, I'm not really trading right now, but there isn't a huge disbelief for it to go down. See, the ATR stands for the average true range, and that's the amount the range of the current movements. So whenever you're trading, look at this right here. You can see how it goes up past the one line all the way up. So it doesn't quite go to 2. So while this trade for this time frame is a decent possibility, this trade's a lot more less likely. But the way volatility works in the market is it'll have quiet moments and then it'll have large moments. So we can go over here, see when the last huge, yeah, we can see it right here. This was definitely 2 right here. So it's been a while. So they might have a huge down movement here soon. It's all really just timing and using probability to determine what you want to do. I mean, you could use you can continuously bet long or bet short on a higher degree and hope that it turns out okay, and just keep on rebetting more, and eventually hope to get it. Like I said, though, you might want to, using indicators definitely kind of helps sometimes. But those are kind of the basic benefits and disadvantages of each. So I'll just go over it one more time. The benefits of having it in the money trade is that it's already in the money. And that means you're more likely to get it if it's following the trend. However, a disadvantage of having it in the money trade that's not close to the line is that you are risking less. I mean, you're risking more to get less. And if the trade turns around on you, you're losing a lot more money. So the benefits of out of the money trades is that when you trade an out of the money trade, binary option, then you can get more money for less. But what the disadvantage is it's less likely to get the out of the money trade. It's all about timing of volatility, knowing your technical analysis and fundamental analysis, and understanding the current market that you are trading in. Those are all very helpful things for when you're trading binary options. All right, guys, I hope this was helpful. If you have any questions, let me know.